Hey guys, it is Julie here with TipRanks, and today we're looking at stocks that fit Goldman Sachs Rule of 10. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Goldman Sachs just refreshed their stock screener of companies that follow their Rule of 10. So today we're going to take a look at 4 of those companies that also come out with strong buy consensus from analysts on Wall Street. Now, what is the Rule of 10? Well, that is a screener that looks at S&P 500 stocks that have seen at least 10% sales growth over the last 2 years and are anticipated to maintain that growth rate over the next 3 years. There are currently 20 stocks that meet that criteria, but we're going to be focusing in on 4 today. Just before we get into all that, don't forget to hit that thumbs up button and make sure you're subscribed to the channel. Plus, head over to the TipRanks website so you can take a closer look at these stocks for yourself by following the links in the description down below or downloading our mobile app. All right, let's get right into these Rule of 10 stocks. First on the list, we're taking a look at SolarEdge Technologies. Trading under the ticker SEDG, their stock currently trades at $266 per share. Now, they are fairly flat overall for the past year, down 1.3%, but have fallen about 4% in the last few months. The company designs and manufactures microinverters, which are an essential technology in solar power installations. SolarEdge is one of the leading companies in the U.S. microinverter segment with approximately 40% of market share, but they don't rely solely on this business. They also produce a wide range of solar technology products, including monitoring systems, power optimizers, and even solar-powered EV chargers for home use. They market directly to the residential market as well as to commercial clients. The company has projected annual sales growth of 24% from 2022 through to the end of 2025, and in their most recent earnings report, they came out with a massive earnings beat, exceeding analyst expectations by nearly $1 per share. For their Q1, they recorded record revenue of $943.89 million, and that was up 44% year over year. Their Q1 earnings per share of $2.90 came in 95 cents ahead of expectations. Following that earnings report, we had a handful of analysts weigh in with their ratings, feeling pretty optimistic on the stock. It currently comes in as a strong buy based on 12 buy ratings and just 1 hold. And their average price target comes in just shy of $390 per share. That would be an upside potential of 46% from current prices for this next year. Now, we do have a couple recent ratings within the last week, both with upsides of 32 and 47%, and then a couple months ago following that earnings report in the high 40 to 50% upside potentials. The next report will be coming out on August 5th, where we'll see more analysts update price targets. The second Rule of 10 stock on our list is APTV. Their stock trades under the ticker APTV, currently trading at about $103 per share. Now, they have seen some ups and downs this past year, but overall are up 14% and nearly 8% over the last 6 months. The Ireland-based company designs, develops, manufactures, and sells vehicle components. The company provides electrical, electronic, and safety technology solutions to the automotive and commercial vehicle markets. They operate through the following business segments: signal and power solutions, advanced safety, and user experience. The company employs over 200,000 people across 48 different countries with 131 manufacturing facilities. Their next earnings report will be coming out near the start of August, and back in May they did come out with an earnings beat, plus saw their revenue increase 15%. They reported revenue of $4.8 billion and earnings per share of 91 cents, beat expectations by 2 cents per share. For their next quarter, analysts will be looking for earnings per share of 98 cents, which is a notable increase from the year prior. And of course, following earnings, we have analyst ratings. The stock also has 13 analysts weighing in with 10 buys and 3 holds. Their strong buy rating comes in with a price target of $127, which would be an upside of nearly 23% from current prices. And a lot of our ratings are a good couple months old following that last earnings report, but still have some impressive double-digit upside. The most recent come within the last month, both with a 25% upside target. Third up, we have INTU. Trading under the ticker INTU, their stock is priced at $456 per share. They've seen growth of 14% over this past year and have been up over 21% in the last 6 months. Intuit is a software company known for their 2 flagship products with TurboTax and QuickBooks. These software products provide tax calculation and filing services, bookkeeping capabilities, and other accounting tasks optimized for in-home or small business use. Their other products include the Credit Karma personal software package and popular marketing automation system MailChimp. They're anticipating a compound annual growth rate of 13% through to 2025 and just reported their strongest quarter at the end of May. Of course, that is aligned with tax season. The company did see revenue grow by 7%, with revenue coming in just above $6 billion. On the earnings side, they came in at $8.92, which was a sizable beat from the estimated $8.48. And when I talk about seasonality here, you can see it in the chart as well when we look at earnings. That tax season is very much their biggest of the year. The next report will be coming out on August 22nd, where analysts are anticipating earnings per share of $1.44. And as I promised, we have another strong buy stock. This one's coming in with 16 current analyst ratings. And that breaks down to 15 buys and just one hold with an average price target of $508. That would be an upside of 11% from current prices. The most recent ratings coming in with the last month range from 16 to 28% upside, and we can see the rest from last month hovering around that 10% mark. And our fourth rule of 10 stock is ServiceNow. Trading under the ticker NOW, they're priced at $560 per share. While they have seen some downs at the start of the year, they've seen a lot of growth recently. They're up 13% over the past year, but looking at the last 6 months, they've seen growth of 53%. ServiceNow is a software company that provides cloud computing services to help companies manage their digital workflow. The company's technology platform, referred to as the Now platform, allows for the connections of systems, silos, departments, and processes with digital workflows that give IT departments the ability to design, develop, and operate across the entire IT lifecycle. In their latest earnings report, they came out with yet another earnings beat, and they have a long track record of those. Plus, they increased their revenue guidance for the future. Their total revenues of nearly $2.1 billion represented 22% year-over-year growth. They reported earnings per share of $2.37, which was a solid beat over the expected $2.04. The next earnings report will be coming up soon on July 26, where analysts are anticipating earnings of $2.05. Now, the ServiceNow stock comes in as a strong buy with 28 analyst ratings. But the average price target actually has a downside. And you might be thinking, why would you show me a stock with a downside? But we need to take a closer look. Their ratings break down to 26 buys and just 2 holds, but the average price target of $551 would be a slight downside of over 1.6%. And that is because a lot of our price targets are coming from at least 2 months ago, and those price targets have already been exceeded since the stock has seen a lot of recent growth. But if we look at the more recent ratings in this past month, we do have reiterated price targets with some upside potential ranging from 7 to 18%. And you can bet following that earnings report coming up in 20 days, we'll see some higher price targets as well. So there we have 4 stocks that all fall under Goldman Sachs Rule of 10, plus come in with a strong buy consensus from Wall Street Analysts. What do you think of these 4 companies, and what other Rule of 10 stocks are catching your eye lately? Let me know in the comments down below. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those Wall Street analysts are up to and providing some information and entertainment. Make sure you always do your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thanks so much for watching. Have a great day, and I'll see you back here next time.